With the close today, I think the cumulative tick indicator here gave us a very interesting hint, I think, for what we should expect for tomorrow. Now, the hint right here says likely trend exhaustion. This is clearly in the bearish zone, and I'd like to at least go over what I think this means for stocks and futures for tomorrow. Now, before we do that, let's first revisit all the times in which this condition has been true. And so if I come into our studies icon here, and let's just show the end of day line. So I'm going to turn off the edge signals. I'm going to turn off the 7 a.m. line. Actually, I'll leave the edge signals on. We'll click apply. Now, if I scroll all the way back, we'll take a look to see the other times in which we've seen a likely trend exhaustion and what's happened the next day. So if I scroll all the way back here, I'm on a 5-minute, 30-day chart, and you should notice right off the bat, this doesn't happen too often. So whenever it does happen, that to me is information and something that we want to pay attention to. Now, the last time this happened was we had a likely trend exhaustion move right here, and this was in a bullish direction. Now, take a look at what happens the next day. To start off in the morning, we have a little bit of a rally, and from that rally, we then start to sell off for the rest of the day, aka a trend exhaustion in the bullish zone, right, from the day prior. Now, in terms of hints, you can take a look. The edge signals here helps in terms of timing a place in which you expect the trend to start to exhaust. For those that don't have access to the edge signals, I think the supply demand edge indicator here also starts to give you some sort of information. But the whole idea is the day prior, we had a very strong bullish move. Some might even argue that this was a trending up move, right, off of a 5-minute chart. Then we had the ticks with the data analysis that we had done suggest to us that this trend had likely exhausted. We had essentially gone too far up. Then really in overnight activity, we chopped around to drift it down just a little bit. Again, in the morning, had that rally, and that rally was very quickly rejected. And this is the move that I'm looking for tomorrow, except in a bullish zone, right? So today we had a bearish trend exhaustion. So I'm expecting again in the morning, we have a slight little bit of a sell-off here. And then after that, we have a nice rally for the rest of the day. At least that's what historically the data suggests is likely to happen. If we keep going back here, here's another time in which we had a trend exhaustion move, very similar to today's actually, in which we had a bearish likely trend exhaustion move. Let's take a look to see what actually happens tomorrow now. Now, tomorrow, you should notice, based off of this historical time, we had a trend down move, and the edge signal then helped you in terms of timing a place for the reversal to expect a rally really into the final hours of the market, into the close. That's to say, I don't expect this bearish trend to continue tomorrow where we have a trend down move. More so, I expect to see a reversal of sorts. The only question is how much do we drop, if we drop at all, before we see that reversal. And I think tomorrow in particular, this edge signal confirmation, leaving that on for all of our members with the ticks, and when that specific Boolean condition pattern tends to be true, that will show up on the cumulative tick indicator here. That to me is then your sign to try and play some out of the money called debit spreads on something like the SPY, the Qs, the DIA, whatever you're looking for. The benefit that you have with the SPYs is you have the less days to expiration options. Now, if we come into the options chain here, the options that I think that would be interesting for tomorrow's trade, if this condition does happen to be true, is this 25th September 2020 options. That should tomorrow be 1 days to expiration, where really you'd be looking, depending on the kind of move, something that's out of the money, something that really fits your risk to reward parameters there, but something that's out of the money if we come to our daily chart here on the SPY and try and find some interesting levels here. And let's actually add in that 100% retracement zone here. Then I think that gives you a decent place where you may be looking to try and target. Now, keep in mind, I don't really think that you would get a move all the way up to 339.08, but that should start to at least give you an idea of where you may be looking at in terms of trying to find the out of the money call that you're first willing to buy, and then have some option that you can sell against it. That's all to say, really, you want to skew the risk reward away from a 1-to-1, where you're really risking 1 to try and make either 3 or 4. That would be my goal for this sort of trade tomorrow, especially considering that you have data on your side. Now, in terms of what I think that means for both stocks and futures, so if I come into a 1-minute chart here, with futures in particular, I would be looking at buying any really dips into our volatility box lines. So to give you an idea of what that looked like, today when we had the break, we saw on our scalper, this was towards the edge of the hour, so free information, but we had price action fall into our volatility box cyan lines. And typically from this point, had this not been the edge of the hour, we would expect price to start to reverse from here. Now in the case of today, price just continued to keep falling down, right? We don't expect this to happen tomorrow, but But in the case of today, that then took us to the aggressive volatility box. Again, tomorrow, I think combining both the Cumulative Tick Pro indicator along with the volatility box will help to at least give you a better place to also put your stops outside of, even if we don't fall all the way down to the cyan line. That's to say, let's say in the morning hours here, maybe in the 7 to 8 a.m. Pacific, so this is 1 hour after the market opens. Let's say you see the edge signal happen somewhere right around here, but we haven't really fallen all the way to our cyan line, but maybe you're somewhere right around here. That's where you have a very decisive place in which you're proven wrong. That would be outside of the volatility box in the event that we have really a bearish trend down move and the data that at least we've gathered, the Boolean conditions that we think to be true don't happen to pan out to be true. Well, this is a place in which you know that, hey, you're proven wrong. And if you did want to take a stop, that would be a place to take a stop. Now, keep in mind for the SPY trade that at least I'm suggesting that would be interesting for tomorrow, that hopefully is one in which the debit is 100% of what you risk, which kind of gives you a pre-built stop, right? You're really just waiting, rolling the dice to see whether or not this condition tends to be true. And especially knowing that the 2 days to expiration series is the only one that you have available, you also have the additional day to try and see if that move tends to come out in your favor just in the event that price does continue to keep drifting down. Now, in terms of stocks, what I think would be interesting is for anything that hits the live scanner tomorrow, something that really starts to look more like Accenture did today. So if I load in the stock volatility box here, Accenture hit our live scanner when we had price action breach our volatility box entry levels right here. Now, the reason why I'm talking about Accenture, it's one of those larger names. It's one of those names that's weighted per our indices. These are the sorts of names that I'd be looking at for tomorrow. Anytime we have something like this hit the live scanner, combined again with that same Cumulative Tick Pro indicator, that then starts to give you some very nice areas in which you're looking at some specific candidates that are outside of the SPY for places in which you expect a reversal. Keep in mind the setup here is a breach of the volatility box entry lines. You're then looking for the edge signal just like we had right here. And then that's really it. This is the entry of the trade. Any price better than the clouds, stop is outside of the volatility box clouds, and our target is at this gray target line, where tomorrow in particular, I think I would be looking for that first target to be at our gray target line. And then if we do get the reversal that I'm expecting that we would see, at least based off of, again, all of the data that would suggest that, then that second target would be this gray target line right here, giving you a nice opportunity to play some of those reversal type moves. So tomorrow in particular, via stocks, I think the first contract again, or first batch of shares, whatever you're trading, should still be taken off at our target line right here. So still follow the rules there. But that second target, I think, is where you can start to be a bit more aggressive in terms of what you're targeting. Move the stop to break even, really be playing with house money, right? A $0 trade, in which you're looking to see if we do get some of the nice reversal moves to the other side's target line, which should make for some really nice risk reward trades as well. To recap for today, the Cumulative Tick Pro indicator is where we have this bias for tomorrow in terms of having a bullish bias. However, in the morning, I wouldn't be surprised to see at least that immediate term sell-off. Gets a lot of people to get short, right? Starts to really get them to be bearish. And then we have that sharper reversal. The way that we were looking to essentially time this entry based off of the edge signal indicator along with the pattern that we've coded with the cumulative ticks to essentially turn out to be true. Once that happens, I think you can use both the futures and stock volatility box levels to try and play the reversals. Now keep in mind in all of these, we want to make sure that the risk that you have is defined in a way that your account can tolerate. Just because we've seen this pattern to be true on essentially all 30 days that we've backtested so far in this video, or not 30 days, but the few instances over the past 30 days, rather a better way to say that, doesn't necessarily mean it will hold to be true tomorrow. So you want to still make sure that you're managing your risk in such a way that if the trade does tend to be a loser, doesn't kill your account. However, if the trade does turn out to be a winner and follow really the pattern that we expect to see, then you're really well compensated for the risk to reward ratio that you've taken. All right, hope this video helps. For all of our volatility box members, if you haven't already, I would suggest watching the Cumulative Tick Pro indicator tutorial. You can find that at tosindicators.com/indicators/cumulative-tick-pro, and that should help to give you an idea of more of the logic behind some of these signals and why they're actually triggering and happening to be true if they do happen tomorrow. All right, take care, everyone. Good luck trading, and we'll see you in the next update.